I know we wanted to talk about was, let's see, the title, What's Driving the Real Estate Inventory Crisis? These 5 trends. So how do you want to open that up, Darren?
The article breaks it down really well into 5 categories, and we'll navigate those 5 components. But we're in an inventory crisis. If you're at all paying attention to real estate, you're aware of that. And in real estate, it is a supply and demand driven environment. So when inventory is low, prices go up, and rents go up. Price of housing going up translates to rents going up. We have a shortage. I mean, some estimates I've heard are around 500,000 homes short of what we need to occupy people that are currently here.
Right. Let alone the future. Right.
Yeah, exactly. Yeah.
Well, this graph definitely gives a stark picture. One of the things. Oh, sorry, guys. It's funny. I've been looking at Bitcoin charts and digital currency charts, and it's like minute by minute graphs and hour by hour. It just blows my mind. This is a little bit easier, but still, we're only talking about a short period of July 15th at somewhere a little over, let's see, total inventory homes for sale in the U.S., single family. So that was a little over 1,100,000. And now we make the march to January 21st, and we're at 336,924 in the whole nation. So.
Right, and that's showing a trend that we should be approaching. So that's it's a 5-year, Joe, I'm trying to see. Yeah, it's a 6-year. It goes back 6 years, and it's showing that you hit a trough every...
I'm sorry, this is 2020 to now.
No, it's going back, Joe. It's July
15th.
July 2015.
Oh, I'm sorry.
Yeah, it's all good. So July 2015, it's showing that, when you approach the soft winter months, inventory goes down, but then as spring approaches, you get the spike. Every year you get the spike. Right. And then it ends in a trough, late winter or winter, and then but this year, it's on a downward slope altogether. Inventory has been going down since 2015. But and it even followed that normal pattern into 2019 where it rose. But coming out of 2020, it's just gone straight down. There's been no spike. There was no spike last year, and there's been no expected spike this year in inventory. And that's the balancing of the system, and it just hasn't been balanced.
One thing I wanted to bring up, and I know we were talking about this earlier, is so the source of this is Inman.com. This is an industry real estate agent site. If you want to check this out, we'll post it on our blog, some of these URLs that we're talking about. But I think you get maybe like 15 or 20 free articles, so you can see this yourself. But yeah, let's just jump into it. We talk about these things constantly, but this seemed to encapsulate the 5 reasons we're in this crisis. So number 1, low interest rates. It might be counterintuitive, but ultra cheap money is a driver of both increased demand and decreased supply. When rates are this low, it becomes very inexpensive to keep my first property for investment income when I buy a new home rather than selling. This phenomenon of homeowners doubling up, buying but not selling, coupled with big institutional investment in single-family rental properties over the past decade, is the reason that there are over 7 million previously resaleable properties that have now shifted into the rental market. As long as rates stay low, this will continue. The only time in the decade we saw inventory climb year over year was when mortgage spiked rates from 3.7% to 4.8% in the latter half of 2018.
Right.
No interest rates.
So, high demand for interest rates and for cheap money is allowing not only institutional investors, which is expected, although institutional investments ramped up after the 2007 crisis, and they really expanded well beyond the multi-unit sphere, which they tended to stay in a little more, and went pretty heavy into the single family zone. So that reduced inventory by itself. But as it said, for the last decade, rates have stayed low, and there have been a good amount of people who may have never owned a second property. Either they navigated through that trend and still own their property, or they bought one 5-10 years ago and realized, hey, I can still make money on this and go buy another property. And in that scenario, often it's refinance because I have a ton of equity, go buy my second property and rent the first one I bought. So there are a lot of mom and pop that are out there who own second and or third property. So, we need more homes. Part of that is because a lot of those are owned by investors.
Yeah. I believe, I forget, is it BlackRock or Blackstone? That is just one fund that has, when I read this article, like $10 billion in housing. And
they're one of the biggest REITs. Yeah, real estate investment trusts out there. They are. And they benefited in a huge way from the resale of potential foreclosures because of the 2007 crisis.
Okay, let me move on to the next one. So number 2 is buy low, sell never. Echoes of number 1, but during the past decade, just as real estate holding costs plummeted, income on properties climbed. Innovations like Airbnb, combined with an explosion of alternative dwelling units, meant that single-family homes are much more likely to generate positive cash flow than ever before. It's been an excellent decade to own real estate.
Right. So another positive thing if you're an owner,
Yep.
and or already own property, that is translated into making those more lucrative, but harder for more people to get into the world of real estate because you're keeping property again and not putting it out there on the market for sale. ADUs have been huge to add value. It's turned a lot of single family zoned properties into multi-units. It's really what it equals. The term ADU is accessory dwelling unit, initially meant to house extended family for the most part, but it's now a rental unit in many cases.
Yeah. Well, tomorrow I have an appointment with my wife to meet with, is it Super Shed? I forget which one it is, but Studio Shed. And maybe I'll have more info next week after that. But that's, for me, maybe a retirement situation where, I put an ADU in the back, I rent the main house.
Sure, and the other one, which it's just said in passing, but it has also had an impact, Airbnb, is it has allowed people to buy. There are people that were buying houses for the purpose of renting them for Airbnb only. And, the cities, particularly large metropolitan cities, have done what they can to eliminate some of that. I mean, to me, it seems unfortunate that it was an opportunity for the middle class to expand a little bit and create more opportunities for themselves. I would have rather seen them open up some of the zoning restrictions and make building more efficient and continue to collect the money on Airbnb units and apply it to build more spaces. But instead, they just decided they were going to take that business away from a lot of people who live in the city.
Yeah. Well, a good number of people depended on that Airbnb income, sometimes to even buy their home, which is really on the edge.
And a lot of people, and there are a lot of them in LA, that fall into this self-employment category, whether, there's a variety of businesses they could be in here and be self-employed, use that to subsidize income. And it was a stabilizing factor for them. So they eliminated that stabilizing factor.
Okay, I'll move on to number 3, underbuilding. The hangover from the bubble burst 12 years ago meant that home builders built about half as many homes for most of the past decade and are only now reaching long-term normal construction levels. This phenomenon limited the growth of housing supply, exacerbating the effect of low interest rates on existing supply. Underbuilding has led to an ironic twist in the market. Would-be sellers are afraid to list their homes because there's nothing to buy. The cycle perpetuates.
Right. Yeah, it's the first question we ask everybody who's considering selling. We always say that we're thinking about not just getting your home sold, but where you're going from here. We want to get you to your next destination, and sometimes that ends the conversation.
Well, let me share. This happened, I think, last night or the night before. I'm sitting on Facebook. It's the Eagle Rock group. Big part of what we do is stay connected to our communities. And this was a bit of a desperate plea, but this woman said, "Oh, we just sold our home off market. We can't find anything though. Does anybody have any place to live?" And even though in the comments, people said, maybe you should have gotten an agent to help you with this. Oh no, we're quite satisfied. So very happy with her sale, but what is she going to do with a purchase? I think she had $400,000 to spend, and she had to look out in Chino.
Gosh.
So, yeah.
Well, and that is something an agent does. That's the first thing like I said, first thing we do. Where are you going? You can't sell if you don't have anywhere to go, and that's the smart thing to do. It really is. So.
Okay, demographics. We're now well into the millennial era. There are more millennials than any other generation, and this crowd is coming into its peak years for earning and home buying. We have a solid 5 to 10 years of millennial demand in front of us. At the same time, boomers have had inexpensive mortgages for years, and they've held on to their homes much longer than previous generations.
Right. So, more demand for houses. I would say that more than 50% of the people we're working with now to buy are millennials.
Yeah.
So it's supporting that position, and they're creative. They're extremely educated. They take risks, but they're calculated risks, and they're ready, willing, and able to buy. And those numbers, I would imagine, are only going to increase as they state.
I think on the other side too, looking at boomers, as we've said, sitting on expensive mortgages, have a lot of equity. But I think the boomers are changing in their work style and lifestyle also, depending upon where you are. But I'm sure boomers in Los Angeles, they're working more. They're finding a different balance than maybe the past generations. And they're not going to give up their homes.
Interestingly, I just had a thought. Again, earlier we were talking about how history repeats itself. In the areas, a lot of the areas we serve, there were a lot of homes built, 60, 70 years ago. A lot of the homes built in the teens and 20s, maybe even into the 30s, were built large. And what happened when there was a housing shortage at one time, or there was a downturn in the economy, a lot of these larger homes were carved up into units.
Wow.
They weren't even adding footprints. They were just carving them up into smaller spaces. We may start seeing more of that. I think we're kind of seeing it with the ADU component. Mm-hmm. You can actually carve out interior, and I don't know if a lot of people know this, but you always think of building an ADU as a separate space. But you can actually take the existing interior square footage and carve out interior space to create an ADU as a second unit.
Right.
We might just start seeing more of that because there are still a lot of those um, very large homes, 2,000, 3,000 square foot. People are becoming very comfortable, at least in the city, in living in 700-800 square feet. It's a comfortable
Yeah.
space. I mean, they're
Yeah.
selling a 187 square foot space to live in there. I bet we'll start seeing more of that.
Yeah. The future. Amazing. All right.
Yeah. Look to the past for the future. Yeah.
All right. Number 5, homeowner focused policy. Now, this is a big one. The CARES Act foreclosure moratorium has kept some properties from coming to market, staying instead in the hands of distressed owners. But the foreclosure pipeline was already at record lows before the pandemic hit, and Americans have gained $1 trillion of home equity since then. As a result, pandemic distressed homeowners seem unlikely to add to our inventory anytime soon. Although there are still 2.5 million homeowners in the mortgage forbearance program, many of whom have not made a mortgage payment in a year, these homeowners have gained significant equity wealth in that time. People default on a loan when the deal is not worth saving or they're upside down on the value. Very few people are facing that situation this time around. The fact is that policymakers have been focused on keeping people in their homes. Essentially, all U.S. housing policy, whether tax, mortgage markets, or pandemic related, is aimed at helping people who already own their home, often to the detriment of new buyers.
Right.
Yeah.
Well, that last line is interesting. To the detriment of new buyers, right? Low interest rates to the detriment of new buyers. Yeah. Value in ADUs and keeping your property detriment of new buyers. And now forbearance policy and keeping people in their homes is making it harder for new buyers. But that one, for me, was the most interesting one in this article. The unexpected one. All the other ones I kind of had my head around. You keep hearing people, and like I had a conversation yesterday with a 40-year experienced agent talking about how the foreclosures are coming. They can, as they show there, they can keep track of how many people are in forbearance. And the reality is the majority of people that get that far behind, unless their entire forbearance amount is put to the end of the loan, which it's possible that it will. My belief is that policy will come out that will accommodate homeowners like it did in the housing crisis of 13, 14 years ago, that tried to keep people in their house. The difference there was, and this is the big difference, is that they have equity. They've been building equity while not paying their mortgage. Yeah. Back then, they lost value and they were upside down. They actually, even if they could, had no real incentive to stay. They figured they were upside down. It wasn't worth it. But people now will have the choice to sell. There could be an increase in inventory, and I would say that there will be at some point if the forbearance isn't put towards the end of the loan, or there will just be some of those people who can't go back to work and don't have the ability to earn the income again. So they will be forced to sell, but they'll have equity. So it won't be a distressed sale.
All right. Okay, well, let me finish out. I think there's some hope in this last paragraph or so. What will help us emerge from the crisis? The most important factor is mortgage rates. As rates fluctuate over time, look to a 3.5% threshold where consumers start feeling the pinch of higher payments. This will change the calculus of what they buy and also what they hold onto or sell to finance the new move. The new home construction is also finally climbing and will begin to add a little to the market. More construction will be critical for boomers to move into retirement and millennials to get their first homes. We also really need to change the focus of policy from homeowner-centric to housing market-centric. Loosening policy on foreclosures and construction would help, as would more flexible property tax rates that would keep fewer people locked into low tax basis properties. The good news is that in this crisis, Americans have gained trillions in wealth. Even those most tragically affected have been able to stay in their homes and benefit from large increases in equity. And there's still tremendous demand waiting to be unlocked if we can create the conditions to do so.
Right. Not much more to say than that. I think it sums it up well.
Yeah. Well, when we were talking about this earlier, I mentioned, it's weaved into here somewhere, but we were talking about rezoning and accepting higher density in some areas, whether it's state mandated or it'll be controlled better through local government.
Sure. There was a great article in the LA Times this weekend in the opinion section about how to move out of the housing crisis and the low inventory. And I think, unfortunately, our local representatives, our city representatives, know we need a lot more housing. They do know that. Their approach to it is helping minimally, in my opinion. I think they need to become more aggressive, and they cannot be overridden by those who just want low density neighborhoods. And the interesting thing about the article, although it doesn't specifically state this, is that the city can control its own zoning. That's the biggest control any city government has, to zone areas, which will then determine how those areas evolve over time for more density, for commercial, to residential, how high you can build. That's all under the control of the city. And often they take advice from each community. I participated in helping prepare community plans. In our case, it was the Echo Park Silver Lake Community Plan. And a lot of them, over time, they've...
Oops.
been able to get ahead of the curve. And we okay?
Yeah.
So, the density, we're still always going to be chasing those numbers. But from the state level, they're sitting there saying, you can't keep doing this. I mean, they just about forced ADUs. Well, they did. The state said, you have to do ADUs. You have to do these minimal things, and you have to process them quickly through your building department. They set a mandate of a response time, and those are a little out of whack because of COVID, but they basically said you can't be inefficient, you have to allow it. Well, they may end up doing the same thing. Like the state of Oregon, they eliminated the zoning for single family homes. Now, if we don't do anything in the city itself, I think we're going to have another forced state initiative that says, that's it. No more single family zoning. It's not allowed in the state of California. That means everybody who owns a single family will be able to build a second unit. If the city does it themselves, they can guide that in directions they want more density. But otherwise it's going to be forced on us. So, because something's going to change.
Well, and I'll just finish out on this. You were talking about COVID. I know the hotel industry has gone down because of this. We know commercial, it remains to be seen what's going to happen. But yeah, there have been rumblings of opening up these areas of real estate to more residential zoning.
Right, and shifting commercial to residential zoning. As we saw, that was the biggest change of downtown LA. A lot of those commercially zoned areas shifted to residential because they weren't being utilized. And with so many things going online, we don't need as much commercial retail space. They're more, I think their higher use is social gathering environments, meaning, places to eat, places to drink, places where people actually want to show up and gather. There won't be as much of that needed from a retail perspective.
Yeah. All right. New world. Speaking of new worlds, as we move out of this, I've got an idea.
What's that?
Let me show you this. I didn't share this with you, Darren, but let me give you the new Earth. It's Earth 2. So if you don't have enough money for the real world, some enterprising guys or girls or both have created a digital copy of our Earth, and you can buy some digital land on here. So yeah, I think Taj Mahal is already taken. I think Great Wall is taken. I haven't looked up 2231, my address, but I don't know. Maybe I need to go buy it.
Do you have to buy it with digital currency?
Yeah, that I haven't checked on. But yeah, the Matrix is getting real. You never know.
Wow. And are you going to get the VR that you can walk around your space then and exist?
I don't know. I'm sure IKEA's working on this too.
Yes.
Furniture and whatnot. All right. Well, Darren, anything else? I think that's it for the meat of what we are doing.
Yeah, good conversation. Such a relevant topic to today, but and getting your head around it helps you make good decisions on whether you want to jump into the game. We have people that are like, I'm going to wait, or I'm going to wait for foreclosures, or it's too hard, it's going to change in the future. And understanding all this is so important to determine how to make moves in your own life.
Yep. Okay. Well, let me go ahead and switch into new listings. Yeah. So if you have a listing in particular you want to talk about, please let us know. This part of what we do is really about the new listings in Northeast Los Angeles, where we dwell, where we work mostly. But we do work in other areas. For instance, we're going to be in Arcadia maybe in a couple months with the listings. So whatever questions you might have, let us know. And I'm going to put on some music here, see if that gives us a little bit more entertainment value. Let me move it down. All right. So we have this week 39 listings in the last 7 days for Northeast LA. And let's see. Let's get started. I think 343 we already did. Let's look at 540 North Commonwealth.
Hey, Joe, I don't hear the music if you're trying to put it on.
Oh, really?
Yeah.
Well, I'll have to ask my wife. I have no idea. I hear it. It's coming through. Yeah, we'll see. Okay, just bear with me here.
I don't want the entertainment factor to drop off at all, man.
Yeah, it's all on us, man. All right. Okay. Okay. Okay, 540 North Commonwealth Avenue. It is 3 bedroom, 3 bath, 2,640